So, yo, what is up for everyone on the YouTube replay? I hope you are having a great Sunday. Yo, go ahead and skip this stream about 20 minutes in because that's when the market opens. The market opens in 20 minutes. So, let me go ahead and give you a quick portfolio update. Let's hope we can continue the already insane gains we had on Friday. Let me actually go ahead and pull up the QQQ, for example. The QQQ last Friday closed at an all-time high. So, I'm already shocked. Anything green would just be even more amazing. So, yeah, I'm super excited to see what happens. I'll go ahead and share with you all three of my portfolios. Yeah, so here's our Webull account right here. This is known as our risk on portfolio. It's everyone's favorite because I own a lot of risky names like AMD, Robinhood, SoFi, Reddit, Supermicro, and we have some big losers in here as well like UiPath, Zoom, Sprouts Farmers Market, Progressive. So yeah, a lot of these type names. I'll also share with you the new stock I'm going to be buying next week. I'll actually go ahead and share that with you. It's in our Roth IRA. And again, our Roth IRA is kind of all over the place. I plan to sell some stuff out of here and consolidate some certain stocks. But yeah, I'm actually looking at buying ticker symbol COCO. I actually already have a buy order in right now. But let me go okay, I'll get back to the stock portfolio update in a minute here. Let me share with you what I really like so much about Vita Coco. It's a coconut water play. They literally own 45% of the entire market share for coconut water. And I think coconut water, people are just going to continue to buy that stuff. But yeah, if we go to Vita Coco water right here, it's growing very nicely. Like the sales are up 25% year over year, literally to a new record. Like that is insane. That's what you want to see. They also have their private label brand. They're beating on expectations every quarter. It made good EBITDA. So their company has no debt at all. It's a completely debt-free company. They make basically 20 mil of net income a quarter. They had a little one-time adjustment, but they make like 20 mil of net income a quarter. They make interest on their cash. They're growing nicely. So yeah, I just like this one. Again, it's super competitive industry. The coconut water industry, they have a $2.2 billion market cap, but I like the brand. I've been buying a lot of their stuff personally. So yeah, that's one I'm interested in looking into buying into. As again, it's right now it's not at a valuation I'd love to pay. Like it's at an okay valuation, so I'm going to nibble on it, but I'll make it a meaningful size position probably much more down in the future. But yeah, that's our Roth IRA. Year to date, we're up 10% year to date, and in the past year, we're up 10%. Yeah, we basically started our Roth IRA exactly a year ago. And yeah, another stock I'm looking to buy more of is Wix. They're like your only vibe coding play after their base 44 acquisition. So Wix is kind of cool. But yeah, let me go over my dividend only portfolio right here. This is our yeah, this is our dividend-only portfolio where, of course, every stock in here pays a dividend. But as you can probably see, most of these are like dividend growth companies like Meta, Google, Constellation Energy, United Rentals. They all have yields, but the dividend yields are like 0.3 or 0.5%, really low. But they make up for it in terms of stock price appreciation because you get a lot more than just the dividend every year. So yeah, let me go over our Moomoo account right here. So if you look in the top, it's called our buy and never sell account because yeah, once I buy a stock in here, I legit try and never sell it. And this has been what our main winner of a portfolio. Hey, what up, Noah? He said, what apps do you use for the analysis? Yeah, hey, all the apps I'm using are all three of these I'm using right here. They're all brokerages. They're all in the link tree in my bio. Not sure which one you're talking about there, but yeah, I have a video where I compare all the apps here. Out of all three of them, this one's my favorite right here because it's lowest fee, free brokerage, coolest analysis tools. But yeah, link tree in my bio, very first link there. But anyway, here's our Moomoo account. It's called our buy and never sell portfolio because once I buy a stock in here, I legit try and never sell it. And that it's kind of like a case study. That's how our year-to-date performance, we're literally up 80% year to date. And the S&P 500 is only up 15% year to date. Why is that? That's because we haven't sold our stocks before today. Like most people, when they're up double, triple on a position, they'll trim out of their position, sell the majority of their position. But I'm actually trying to not do that at all in this portfolio. Like Powell Industries hit an all-time high on Friday. We're up over 4, nearly 5x on that company. We haven't sold a single share before today. Comfort Systems as well. This was our real winner. This is the real reason we're up so much year to date. On Friday, they were up 19%. To a crazy new all-time high. We bought the stock literally earlier that year. Amazon's another great one that I've been dollar cost averaging into. So yeah, I recommend if you want to buy a stock, dollar cost average into a DCA. Hey, what up, Brian Mills? Good to see you, brother. So Todd said, or Ronnie said FRMI stock, and then we'll look at him. And by the way, in 15 minutes, the market opens, then we'll see how our stocks are doing. So yeah, here's FRMI stock. Looks like they just IPO'd. legit 2 weeks ago, but they're a $13 billion company. So they have a big market cap. We probably won't be able to get too much data. So yeah, look at this. When we click on revenue right here, it says no data because they literally just IPO'd, which is unfortunate. What industry are they in? Oh, they're a REIT right here. So Rethink Power. Okay, whatever. World's largest next-gen hypergrid powering AI. Well, it looks like it says it's a REIT right here, so they must have a dividend or a specialty REIT. I put them on my watch list for some reason. I wonder what specifically assets they own. Unfortunately, they just IPO'd, so there's not too much data, so I apologize. Can't give you any real research there. But yeah, hey, what up, James? What up, Gus? There's a lot of talk about Beyond Meat, but I guess the pump is over. Yeah, Beyond Meat's kind of a meme stock. You only want to touch it for the volatility and the momentum, but yeah, not a great name. So here's Hims and Hers. It's that healthcare company, and they've struggled a bit because basically one of the things that have led to a lot of their sales growth is the fact that they were able to sell a weight loss prescription on their website. They were selling Ozempic. Well, now this company no longer sells Ozempic on their website, but they're getting into new other subscriptions. But so that's why the stock is a bit worried right now. The future growth expectations are going down because they're no longer able to sell weight loss prescriptions on their website. But if we look at their right now numbers, they're fantastic. I mean, the sales are up 73, after grew 52, after grew 83. Like they're on an absolute streak of growth. So that's what I love about them. And also they're making net income every quarter. So this is great. 40 to 50 mil in net income a quarter. These are great year-over-year growth rates. They did just issue some debt for the first time, but I would look into them. But yeah, they did like analysts expected 552. They missed on expectations this quarter. So we're really just watching the future growth on this one. There were I forget the exact prescription they were selling, but they also just added, it wasn't testosterone, it was something new that they started selling. I'm not going to go look for it. But anyway, they're interesting. All right, so hey, MR said Open Door. This is a basically momentum play for the lower interest rate environment because what does Open Door do? They basically just flip houses. I've been to a few of them. Quite frankly, they're not good at flipping houses, but check out what happened last time we were in a low interest rate environment. In 2021, 2022, the sales were insane, 4 to 5 billion a quarter. But look what happened as rates hiked up in a short time in that year. Sales plummeted, fell 62, 69, 70, 50. So really, there's just a lot of hype around the lower interest rate environment. Honestly, the expectations aren't great. Analysts are expecting the revenue to fall to 500 million. That'll be an all-time low pretty much. They lose net income every quarter. So you're pretty much just buying this one solely for the momentum. And if we go and look at the interest rate cut probabilities, here's what's really interesting. If we go to markets down here, because look at this, literally on the October 29th meeting, which is literally not that long from now, on the October 29th meeting, there's a 96% chance of a 25 basis point cut. And then on the December 10th, there's another 95% chance of a 50 basis point cut just off the Fed dot plot projections. But yeah, kind of interesting. That's why Warren Buffett's buying a lot of here's actually Warren Buffett's or Berkshire Hathaway tracker. He's been buying Pool, Lennar, super interest rate sensitive. And so yeah, that's what's kind of cool. All right. Good dividend starters for a newbie. Yeah, hey, I like McDonald's, AbbVie. Those are great. Hey, what up, Catherine? Thoughts on Surf Air Mobility? And I don't know. Hey, I don't know what that is. If you got a stock you want me to look at, give me the ticker symbol and I'll check it out for you. But yeah, SoFi buy or Yo, I love SoFi right here. A great never sell stock right here, but its current valuation is too tough to pay. Yeah, hey Steve, thanks for the roast there. Yeah, McDonald's and AbbVie are great, but as I like it, they have a decent yield. Matter of fact, if we go over here to my Robinhood portfolio, this is called our dividend only portfolio because every stock in here pays a dividend. These are all a lot of my more favorite yield, but all these are like super low yields. One that already has a decent yield is actually Iron Mountain. This one has a 3% dividend, and they have a rule where they don't let their dividend payout ratio get out of the mid-60s. So can you explain the PE ratio? So yeah, the PE ratio, it's super simple. It's just the price to net income. So it's the price to net income plus any share buybacks or dilution. That's pretty much it. So basically just price to net income. But if we go right here to SoFi, this is why they're not just propped up on momentum. This company has real good fundamentals, in my opinion. If we go to their financial services right here, they're a fintech. They have their own banking charter. They got it through a loophole that's patched because of them. This is insane. The revenue's up 105, after it grew 80, after it grew 250, after it grew 440. It literally just hits a new record every year, every quarter. And not even the analysts were expecting that. We can see the analyst expectations. That's down here. That's the orange line. And every quarter, notice they beat on revenue every quarter. They beat on not just revenue, but net income, which is EPS, and on EBITDA, and by a big margin too. They're expecting 84 mil. They did 125. So that's really impressive. That's why I think people are just really starting to take SoFi serious. They did 850 mil of revenue, and out of that, 100 million of it was net income. So SoFi is a cool company. And full disclosure, I'm totally biased because I do own SoFi. It's one of the stocks every share I've ever sold of. SoFi, Robinhood, two stocks that I kicked myself in the nuts for selling. So, by the way, the market opens in 9 minutes, and we'll see how the market moves. Thoughts on AMD? Yeah, what up, Bryce? We'll check. Ooh, wait, let's see here. Hey, what up, New York? Do you mind checking out 7734? Right, okay, let's check this one out, and then remind me to get to AMD. I do want to look at AMD stocks. So this is a $170 billion company. It's a Japanese company. So we'll convert the currency from Japan to USD. They trade at 20 times net income. So manufacturing and sale of various industrial measuring instruments and related growth operations. So they don't have much sales, and they report in, so the revenue this quarter was 94 million, and they did 14 million net income, so they are profitable every quarter. For the fiscal year 2025, they reported a fiscal year, they did 53 million net income. They have a good balance sheet, no net debt, it looks like. I don't really know, though. I can see why the stock has kind of been flat for a little while. They're not that growthy. I mean, I just don't know. 1.3% dividend yield. I would probably just, nothing's really blowing me away there to pay the Japanese, to buy a Japanese company. Okay, so let's look at AMD right here. So this is Advanced Micro Devices. This honestly, I think, is a better chip play than NVIDIA, just because I think it's an easier double. If we go to NVIDIA right here, their market cap, NVIDIA in the top right is worth 4.5 trillion. So NVIDIA is worth 4.5 trillion, but AMD is worth 400 billion. That's because, so if you buy NVIDIA stock right now, for you to double your money, NVIDIA has to be worth 9 trillion. So that's why I picked AMD as my semiconductor play. They're also at an all-time high. So I would just, instead of buying NVIDIA, I'd try and buy some other semi names or just the NVIDIA ecosystem. But yeah, AMD, one of the reasons they're actually the reason they gapped up so much that day is because OpenAI, the creators of ChatGPT, is now using AMD chips, and they also have a 10% stake in AMD now. So yeah, the future expectations are good. They always beat every quarter. They make net income every quarter, obviously. The FCF, which stands for free cash flow, is at 1.7 billion. The PE ratio is a bit expensive. The company is expensive. I wouldn't pay its current valuation. Again, the PE is just price to net income plus any share buybacks or dilution. So yeah, that's what that is. Ocean. Yes, sir. That's what the PE ratio is. All right. But can AMD go much higher like NVIDIA? I think AMD can still go higher, but I certainly wouldn't be buying it at this current price. So, hey, what up, Jesse? I am doing good. How about you? And Phil said Kratos. Yeah, hey, I do like KTOS. I like everything except the valuation, because the valuation's real expensive, but they're a drone play and a government software play. Their government solutions right here, this business is up 30% year over year. They negotiated higher prices, and that was the big win here. We can see the analysts expected only 300, the analysts expected 305 mil. They reported 350 mil. I mean, a huge beat. And here's the drone play, their unmanned systems. Looks like that's down 15% year over year. They are making net income every quarter, which is good, but still the price to net income is still super expensive, but they have the growth. They have the growth. What happens is, hey, by the way, this is a brokerage where you buy stocks on. If you want to get it, it's in the link tree in my bio, the very first link there. How about something in energy? AI takes a lot. Yeah, hey, the best energy play out there, in my opinion, I've looked at all of them. But my favorite nuclear and natural gas play is this one right here. They're the number one nuclear, natural gas, and geothermal play in the U.S. Basically in the world. They literally own 30% of all the U.S. nuclear reactors. There is no close second. A lot of people are speculating on Oklo and SMR, but CEG is the best one in my opinion. All right, so yeah, hey, what was other? Yeah, by the way, I have 3 brokerages here, so all 3 of these brokerages are all in the link tree in my bio. Not sure which one you're talking about. By the way, they're all affiliate links, so If you go and deposit like $100, we'll both get like some free stocks or something. So, all right, let's see here. All right, doing good, Jesse. Let's see. He said, can we look at RSVP? RSVP. Let's check this one out. AVAVV. Hey. Yeah, no problem, New York. And what up, Kevin? Time for me to sell Taiwan Semi this week. Hey, I wouldn't sell out of them completely. Can you check into RSVP? Hey, I can't find that ticker symbol right there. Unfortunately, I did try and find that. So Ethan said TMQ. What is TMQ? Trilogy Metals. So $900 million company. Yeah, a lot of the metals names, kind of rare earth mineral stocks, have been getting a huge bump because the U.S. government has taken into stocks. Trilogy Metals secures federal permit for 211 mile Ambler Access Road project in Alaska. So check that out. U.S. and Australia signed critical minerals cooperation agreement. So Trilogy Metals CEO acquires 1.1 million shares. So anyway, it looks like there's some good news. They're actually going to start on a project. Because yeah, if we go to the right now revenue, the right now numbers, it says it's zero because they've never sold anything, not a product or service. But it looks like they're maybe on an actual path to finally having some owners. Hey, Dick. Hey, Dex. Dude, thank you so much for the rose, that gift there. Yo, if you got a stock you want me to look at, let me know there. I got you. Thanks for that gift. I appreciate that. So, which company's earnings are you most excited for this week? Hey, good question. You know, this week we have a lot of major earnings. Let me actually go check out the earnings hub right here just so we can see. Let me search my watch list. So this week we get on Monday we get Waste Management, Cadence, so that should be interesting. Then UNH, PayPal, so many companies on my watch list. Whoa. So Google, oh yeah, Wednesday's crazy. Google, Meta, Caterpillar, ServiceNow, Airbus, Fiserv, Chipotle, Rollins, Carlisle, a lot of stocks. Coca-Cola Consolidated, Sprouts Farmers Market, a lot. MUSA, Murphy reports earnings, a lot of stocks I owned. And then on Thursday, we get Amazon, Train Technology, Republic Service, Reddit stock. So a lot of fun names next week. Yeah, again, if you want to get this app I'm on, it's a brokerage where you get stocks on. If you want to get it, it's in the link tree in my bio, first link there. Okay, so let's see. Let's all take stock tips. Yo, what up, comedy? DVLT partnership with Tesla. Oh, is that Data Vault company? DVLT. Yeah, Data Vault AI. They're a $950 million company. They're up 52% on the day, though. So yeah, there's a lot of momentum around this company. Do they have sales? They do. They have $1 million of revenue. So yeah, hopefully, a lot of hopium around this name. I wouldn't trust anything meaningful in that name, but a lot of momentum around that stock. That's what's up. Okay. What stock? Alvaro said Palantir. Yeah, hey, Felix. What up, Felix? Dude, thanks for the gift there. And Steve as well. Thanks for those gifts, the roses. I appreciate that. Yeah, hey, Felix, you got a stock you want me to look at too? Let me know. I'll check it out. So here's Palantir. This is a great stock I'd love to own, but unfortunately the valuation is just too high for me to pay. But they deserve a high premium. Not this high of a premium, though, but they definitely deserve a crazy premium. Because check this out. If you go to their government revenue, a lot of their revenue comes from police stations, the military. The government revenue is up 49%, after grew 23, after grew 15. Like the growth rate is growing on the government revenue and not just on that side, but also the commercial side with other S&P 500 companies. That business, if it'll load, maybe it won't. Oh, well, that one's also at a new record. If you just go to their total revenue, it's $1 billion, first ever $1 billion revenue quarter. Out of that billion of revenue, 330 million of it was after tax net income. They have a freaking fortress of a balance sheet, legit, no debt at all. Palantir is debt free. Palantir definitely deserves a high multiple, but yeah, they traded 127 times revenue. It's too high to pay, in my opinion. Hey, thanks again, Felix, for the gift. He said, "Can we look at CLNE stock?" Yeah. Hey, remind me to look at Rocket Lab stock. I do want to check out Rocket Lab. So here's Clean Energy Fuel. So hey, try not to spam there. We'll try and get to all these stocks. I apologize if I don't get to all of them, but I do try and go quick here. But yeah, by the way, if you want to hit the follow button, we stream every single day, sometimes twice a day. So yeah, here's Clean Energy Fuels, a really small name. Probably wouldn't touch this one. Hey, see you later, Steve. He says, have a good night. Got to run. See you, man. So yeah, this is a $670 million company. Let's see if they have revenue. So fuel sales, maybe they sell hydrogen. I don't remember. But let's see, revenue of 100 million. So they're doing 100 million in revenue, a bit slow growth though, like 4, 0, 2. So like single digit growth rates. Yikes. And they're losing a lot of money. That's why I wouldn't buy this name. I mean, the whole company's worth 670 million and they lost legit 20 mil. 130 mil, 30 mil, 20 mil. So just for all of eternity, this company just burned through a bunch of net income. And 100 mil or basically 200 mil the past year, that's like 30% of the company. It's rough. So wouldn't trust that one. But all right. Personally, I'm looking forward to Amazon earnings. Yeah, that would be Amazon should be fun. So RVPH. Oh, RVPH. SMCI to the downside for a little, then big boom. Yeah, I am short term bearish on Supermicro as well. Yeah, hey, we're not going to really cover this name here. Yeah, if you look in the top right, the market cap, they're only worth $60 million, and the stock's at an all-time low while the market's at all-time highs. And yeah, we go to the revenue, it says zero. They're a startup. We just don't really cover those names on here. It's like basically a coin flip. No real fundamentals there. So that's just more speculation. Okay, here's Symbiotic right here. I've looked at a lot of robotics stocks. Actually, one day, one stream, I plan to go over here because there's so many cool watch lists we can look at the investment themes. We're just going to go through all these watch lists right here and find actual good companies because there's sectors I want exposure to. A lot of these sectors I want exposure to, like robotics, but there's a lot of trash robotics names in here, like Rich Tech Robotics. But one of my favorite robotics names out there is actually Symbiotic. Ticker symbol, actually probably my, besides Amazon, this is your best robotics play in my opinion. So check this out. They're a warehouse robotics company helping out Walmart with their logistics. If we look at their second largest shareholder, the second largest shareholder is literally Walmart because Walmart took a stake into this company. They have real revenue, real sales. They have over 1,500 registered IP and patents. The sales growth is crazy, up 25% after it grew 50%. So Symbiotic's a really cool, like real robotics name. All right, so best broker. Yeah, hey, yeah. If you want to get this brokerage I'm on, it's in the link tree in my bio. First link there. This is a brokerage where you get stocks on. King said Keurig Dr. Pepper. Yeah, hey, let's look at Keurig Dr. Pepper. They're actually spinning off Keurig. That's the reason the stock dipped so much, is because Keurig is no longer going to be under this name. It's just going to be Dr. Pepper, and they're going to spin off it into a different entity. Let's go look at their right now numbers again. It's subject to change, but we can see here's their U.S. coffee business. That's what they're going to be spinning off, but so do know that these numbers are going to change in the future, but this has historically been like a slow grower, single digit, but it's kind of like Pepsi and Coca-Cola, both experiencing the same thing, 6, 4, 5% growth. But the net income's honestly the best part here. They had a one-time adjustment this quarter from acquiring Ghost, if anyone's heard of Ghost before, but they're making legit like 500 to 600 million in net income a quarter. And they also have a nice dividend. Let me see how much the dividend cost. The dividend cost, there it is, 300 million. So the dividend cost exactly this quarter, 313 million. Yeah, they could easily afford that because they made 550 million. So you get a 3.4% dividend yield with this company. Maybe the two companies spun off, will be worth more. Separated. They can trade at higher multiples. I don't know. Hey, what up, Affluence? How's it going, man? How are you? Hey, I'm doing great, Mo. How about you, Mo? Hope you're having a great Sunday. Hope everyone's having a great Sunday. Hey, Felix, thanks for all the gifts there. I appreciate that. He said, LEU stock. Let's see here. LEU. And hey, what up, Caden? What's up, dude? So here's Centrus Energy. There's a lot of momentum around this name. Yeah, look at that stock on the weekly. They're at basically, I was going to say all-time high. It looks like they were $6,000 or $8,000 a share back in. Okay, but there's a lot of momentum around this name. Looks like they were bankrupt. Now they're no longer going to be. They're a uranium play. So yeah, I guess if you're looking for exposure to uranium, this could be an interesting uranium play. It looks like they are making profits every quarter. You don't see that much with a lot of uranium names. So actually, this might be one of the more higher quality uranium names out there. If you're just looking for the whole uranium ETF, that's ticker symbol URA. Let's see where is that on this ETF right here. That's the fourth largest holding is LEU. UEC has a mine as well. So, let's check this one out. Chris said EL stock. Hey, what up one time? How's it going? So EL, this is Estate Lauder. Let's talk about Merck. Toast. Oh yeah, we'll look at Toast too. So we'll check all these out. So here's Estee Lauder right here. This is one of the beauty and cosmetics companies. They deserve to be doing this bad. If we zoom out, they were just like 300 a share. What happened? Well, if we go look at their numbers right here, it kind of makes sense. Like the revenue is negative. The sales, the lifeblood of the company, the revenue is down 12% year over year. So the sales are down 12 and they're losing money every quarter. I mean, they made money last quarter, but if you kind of average it out here, they're losing a lot of money. So it's just kind of hard to trust this name. It looks like the sentiment is now in their favor. They're saying like the bottom is in. It can't get any worse than this. And that's kind of why the stock has been kind of rallying up higher, plus the whole momentum. What app are you using? Interesting. Yeah. Hey, by the way, if you want to get this app I'm on, it's in the link tree in my bio, very first link there. Yeah, this is a brokerage, is like where you get stocks on. So, wait. Oh, wait, hold on. I wanted to get to let's talk about Merck. So the thing with Merck is this is one of your healthcare plays. They're the same prices they were back in 2019, probably just because the pandemic's over. So let's go look at their numbers though. So revenue is so a bit of a slow grower, but I'm not too worried about that. Like the revenue is down 2% year over year. So the sales are down 2 and the net income's down 18, but still they're making a lot of money. Easily 3 to 5 billion of net income every single quarter. So that's great, the net income. Let's go check out the cost of the dividend. So they're making 3 to 5 bill a quarter. The dividend cost 2 billion. So they can't afford the dividend. And since they have some leftover money, they just upped the buybacks like crazy. They did 1.3 billion on share buybacks. So yeah, the market is open right now. Thank you for reminding me. Let's actually let's go look at the market. So let's go see. Let's hope we're green in here. All right, as we refresh the page, no way, AMD is up 3%. That can't be real. Let's go check the volume. Well, it's got to be real. Yep, that's insane. No way the market is green. The Qs were already at an all-time high before today. So looks like the market's green in here. Anything down yet? Nothing's down. No way that there's literally no red stocks. Let's check our Robinhood portfolio. Yeah, the overnight market just opened. We're up 0.56%. That's crazy. Yeah, Constellation Energy's up 1. Meta's up 1. Let me check the Qs. Yo, congrats if you own stocks. We're probably going to be green as heck on Monday. I can't wait to see what happens. We'll get back to a portfolio update in a minute here as more volume comes in. But yeah, let's keep looking at some more stocks here. All right. Let's look at Toast right here. So Toast, I actually own this one as well. One reason I suspect Toast is being toasted right now. Yeah, look, we're down. Actually, we're not down too much. We're down 1.5% on Toast. Is because a lot of the restaurants are struggling right now, and Toast is a restaurant point of sales payment provider. And if we just look at the restaurants right now, like just Wendy's, we take Wendy's for example. Wendy's is legit like at an all-time low. Not just Wendy's, but also like Jack in the Box. That stock's also at an all-time low pretty much. They had to cut their dividend. Chipotle's not at an all-time low, but they're struggling. Just like with all the restaurants, like look at Chipotle stock, they did a stock split, but $60, now $40. So anyway, that's the one thing that I worry about with Toast, but I love their numbers and I'm a shareholder. I'm not selling out of them either, but I just wouldn't have it as a super meaningful size position. But check this out. We go to their sales right here. Oops, maybe actually look at it from up here. Actually, no, let's look at it right here. So if we go to the revenue right here, it's up 25%, after it grew 26%, after grew 44%, after grew 58%. So they're on a streak of growth that just hits a new record every year, every quarter, and not just revenue, but also after-tax net income now finally. I mean, they did 80 mil in net income, 50. I mean, they're making net income every quarter. And at this growth rate, what's it going to be this time next year? Also, the FCF, which is free cash flow, is insane. They did 200 mil of free cash flow this quarter. No net debt on this company at all. I think they're making interest on their cash because they have so much. Yeah, they have so much net cash that their net cash on hand makes them 10 to 12 million of interest a quarter. Most companies in this high interest rate environment are paying interest because of their debt, but not them. All right, let's see here. Hey, thanks again, Felix, for the donut. Oh, dude, thanks so much. He said PR stock. What is PR? Permian Resources. That's an oil stock that isn't great. You basically just buy that for the dividend income. But let's check out this other one, NXE. NXE, Next Gen Energy. So this is a Canadian company. Oh, this has to. I want to guess now. I haven't heard of the stock, but I almost guarantee they're uranium because they look exactly like the uranium ETF. Or well, actually, let me not put that claim out there. Yep, uranium play. So yeah, they're a uranium company. They're a Canadian. So we'll convert their currency from Canadian to USD. And it says no data. I guess they're still a startup. So yeah, if we go to revenue, it says no data because they've never sold anything, not a product or service before. So, but it looks like it's just following the momentum of the nuclear industry or the uranium. Nice. What platform is this? Yeah, hey, by the way, this is a brokerage where you get stocks on. If you want to get it, it's in the link tree in my bio, the very first link there. Yeah, this is or I'm not sure what app you're talking about there. Someone said, what is the overnight market? Yeah, the overnight market, yeah. If you go on Robinhood right here, the market opens at 8 p.m. on the overnight. See at the top it says overnight. That's not pre-market, that's not actual market open, but there is volume and we can see how the valuations of stocks are even in the overnight market. Like right now, if I wanted to, I could legit sell all my Google or buy a bunch of Google if I wanted to. But yeah, by the way, I'm not sure which one you're talking about. All three of these are brokerages where you buy stocks on. You know, they ask for a bunch of information. So it's just like, why do they ask me for so much? Yeah, it's because when you buy and sell stocks and you make a lot of money, you got to pay taxes on that money. So yeah, out of all three of these brokerages, though, I like this one the most, Moomoo the most, because it's free, doesn't cost anything, no monthly fees, no commissions or nothing. So yeah, if you want to get this one right here, my favorite and best analysis tools, link tree in my bio, very first link there. Okay, so let's see here. Pitney. Hey, what's that? What's the ticker symbol? If you got a stock you want to look at, let me know what the ticker symbol. Yeah, Microsoft, Amazon, Google, Meta. We got earnings. That should be really fun. So yeah. Hey, what up, Brian? Good to see you, man. I got to learn how to read. Hey, yeah. What up, A7? So, bro, you know Fermi is. I don't know what that is. Give me the ticker symbol. Yeah, if you got a stock, STL. Or wait, someone said GASS. Is that a stock? Let me see. Stealth Gas. Let's check it out right here. So the stock is the same price that it was in 2008, and they haven't paid a dividend since. So this stock literally just is the same price that it was in 2008 without paying dividends. I'm guessing they just sell a commodity like natural gas. Let's go check. Oh no, Marine Shipping, a Red Sea shipping company. Oh, they're in the Red Sea shipping crisis investment theme. So they are actually headquartered in Greece or probably the Marshall Islands. So they actually don't pay any taxes. Let me go verify that. I wonder if we can. Yeah, they don't pay any taxes. So okay. We go to revenue right here. They did 47 mil of revenue, and out of that, they did 20 million of net income. So, yeah, but the margins are so high again because they don't pay taxes. But that's interesting. You know, they're making 15 to 20 mil of net income a quarter, and they don't pay a dividend, and they have a really good balance sheet. I mean, that's the part that I'm okay with. The fact that they have no debt to pay, they have a lot of cash on hand, they're making net income every quarter, and they don't pay a dividend. Like they seem all right. Okay, so have you done BE yet? What is BE stock? Bloom Energy. So yeah, look at the momentum on this one. Hey, what is causing the momentum around this name? Let's go see weekly news. Bloom Energy and Brookfield form $5 billion strategic partnership for data centers. Pretty interesting. We can see the earnings preview. Yeah, so they report earnings October 28th. Wait, what's today? So in 2 days, they report earnings. Let's see what the analysts are expecting. They missed net last quarter, so let's see. Oh, hey, that's kind of cool. Here's what happens every time they normally report earnings. There was a gap down last time. Anyway, let's go look at their actual numbers and future expectations. So yeah, revenue is going to go to 600 mil. The net income is supposed to decline year over year. EBITDA is supposed to decline year over year. I don't know what's causing all that momentum. There must be some good news though. Revenue's up 20%. Still kind of, they made 100 mil in net income that quarter, which is interesting. I'd be careful with this snare. I certainly would be careful buying it at this valuation. I don't know how good the risk to reward looks of this continuing to climb higher, but that's interesting. Okay. All right. Hey, what up, Resh? How's it going? So ABG said PBI stock. PBI. Oh, Pitney Bowes. Okay. So this stock has not done well. It's half the price it was at 19. Actually, if you bought the stock in 1997, you're down 66% on your shares. But they have done well the past year here. Let's go see what they do. So Sand Tech Solutions. Yeah, that's not great. The revenue's down 8%. Just a lot of year-over-year decline, a lot of red on the screen. What about their other business? They're also in pre-sort service. At least that one's growing. So if we combine the two businesses and look at their total revenue, the revenue is down 5%. It's down 5% after it fell 36, after it fell 10, after it fell 5. So yeah, they've been on an absolute decline streak. That's probably why the stock has done so bad. And they have more liabilities than they do assets. Uh, Actually, they did make net income the past 2 quarters, which is good because normally they lose a bunch of money. Hey, dude, Dr. One Fly, dude, just sent like 50 roses. Dude, no way. I really appreciate that. And Ahmed, too. Ahmed and hello from Woodlands. Yo, thank y'all so much for all the gifts there. Oh, dude, I'm so sorry we didn't get to STRL. We'll look at that one after this. So let me look at BITF. Yo, thanks again, Dr. One Fly, for all those gifts there. I appreciate that. And then we'll get to Robinhood stock. And so here's Bitfarms. Now, this is a Bitcoin mining company, but recently, if we look at the momentum around this name, I think it's because they're slowly converting from a Bitcoin mining company to like a data center play, like a small core weave. Like if you go to this right here, where does the revenue come from? 100% of the revenue comes from cryptocurrency mining, but they're slowly transitioning away. Again, at the end of the day, I think this is just a company that owns a bunch of GPUs. No real moat here, no IP. Like it's just a company with a bunch of GPUs, I'm pretty sure. So, and they're, wait, Canada, Argentina, where are they headquartered? Yeah, headquartered in Canada, but they've done great. Like, first off, if you own this one, you're doing amazing because look at this stock. I mean, it's had an absolute monster performance the past couple of weeks here. So, all right, STRL. Let's check this one out. Sterling Infrastructure. This one's kind of like a small, like a smaller version of Powell Industries. They actually kind of moved together. There's Sterling Infrastructure, and I also have Powell Industries down here. Lapar said, what app is this? Yeah, hey, by the way, this is actually a brokerage. It's a software where you buy stocks on. If you want to get it, it's in the link tree in my bio, the very first link there. But here's Sterling Infrastructure. Let's look at their numbers right here. Electrical infrastructure play. Yeah, E-infrastructure solutions, transportation solutions, building solutions, which is a bit interest rate sensitive. So if we go to this business, it's down 1% year over year just because residential markets not showing so strong. But they've been beating on expectations every quarter. Like analysts expected that, but they still beat. Check this out. Analysts expected 550 mil. They reported 614. They beat on EPS, which is net income every quarter, and on EBITDA by 25%. So everything in this company is like headed in the right direction. The revenue is slow right now, 5, 2, 2, 6. That's because they're interest rate sensitive. But the margins, they've actually expanded those. So yeah, the sales are struggling, but the net margins have just been expanding up higher and higher. Pretty cool. Anything you can buy at the moment? Yeah, there's a few stocks that actually, and there's a lot of stocks I wouldn't buy. Yo, the market's going crazy in the overnight market right now. I actually can't believe it. No, the Qs are up 1% now. The Qs were already at an all-time high, but okay. I'm actually looking to buy COCO stock, Vita Coco, what else? Perimeter Solutions, maybe a little bit more. If Call Main, I would buy at their current valuation. Call Main, I just bought 5 more shares of them. Here's my total percent change in every stock. Like we're down on some of these names in here, like Cormedics, Calm. So yeah, Calm has a high dividend yield too. So Calvin said Hood stock. Yo, actually, let's also go see how the overnight market's doing in this portfolio. So yeah, AMD's up 3, Dave's up 2, Robinhood's up 2% as well. Anything down yet? Axon is down, Toast is down, but yeah, okay. Of course, I do own Robinhood. I'm totally biased, and I have a Robinhood brokerage. So, I use the brokerage, and I'm a shareholder. But check this out right here. Here's why Robinhood deserves to be doing this well. They're not just propped up on momentum. If we go to their sales right here, this is what's crazy. The revenue's up 45%. After grew 40%. After grew 52%. So they've just been on a crazy growth rate. All right. So there we go. Robinhood right here. Look at this revenue though. The revenue was 989 million. Out of this 989 million of revenue, 390 million of it was after-tax net income. They're printing money every quarter. These brokerages have crazy high margins, legit a 40% net margin this quarter. So, they're beating on expectations every quarter. That's that orange line. They expected 913. They did 990. They beat by a huge on EPS and EBITDA. Like, Their new Robinhood Gold subscription is making them a lot of money. They're getting into crypto and the prediction markets, so they're just pretty cool. Are these stocks? Yeah, these are stocks right here. What's up, man? Yeah, I don't. We don't really look at crypto. I kind of stay away. I regret that. I regret not owning any Bitcoin because Bitcoin's done so good. But yeah, we stay away from the meme stocks. You know, I don't do options either. I'm just not good at options. So, let's see here. LUMN. So Lumen Technologies. I think this is that company that basically was going bankrupt and then they got saved by a contract. Yeah, look at this stock. It was $1. But now it's $8 after they finally got a contract. And I'm not even sure if they've recognized that revenue yet. Let's see. Yeah, so their numbers are still like terrible. I mean, the revenue's down 5 after it fell 10, after it fell 20, after it fell 7, like just awful numbers. And if we go to net income as well, yeah, they lost $1 billion in net income this quarter. They're super leveraged. Yeah, I don't even think I'd buy this one. There's some sort of good news, but I don't know, man. These numbers are terrible. Yeah, I'd stay away from that one. Yeah, I think I remember they got some sort of like I don't know what it is. I need to be reminded. What's cocoa? Yeah, cocoa's vitamin cocoa, number one. Hey, actually, watch the very beginning of the stream if you want to learn more about Vita Cocoa. Yeah, by the way, I am streaming on YouTube as well. My YouTube channel is called Nathan Roberts, also in the link tree in my bio. But yeah, just type in YouTube Nathan Robert. I'm streaming on there. That's the best way to support me. Yo, by the way, I sell nothing. I have no course, book, WhatsApp, Telegram. I'll never follow you, DM you, none of that. Hey, Bob, remind me to look at PCG later. But yo, hello from Woodlands, dude. Thanks again for the 6 goats. I appreciate the gifts there. Let's check out Alibaba. Do you have any recommended brokerages? Yeah, hey, I love all these brokerages right here. Robinhood, Webull. My favorite one is Moomoo. If you want to get this brokerage, this one right here, lowest fees, coolest analysis, link tree in my bio, very first link there. All the brokerages are on the link tree in my bio. But anyway, here's Alibaba right here, basically Chinese e-commerce play. Let's check out the news, weekly news, anything. Alibaba expands consumer AI portfolio with smart glasses. Alibaba Cloud leads China's AI infrastructure with innovative solutions. Market projected to reach 150 with 24.7% market share. Okay, so anyway, they've, as we know, Alibaba or AliExpress owns Alibaba, that e-commerce play. It's kind of like a competitor to Amazon, but not really, because AliExpress is more business to business, where like Shopify businesses buy their stuff in bulk, where Amazon's more business to consumer. But yeah, then they have also their intelligent cloud business, which is growing nicely now. Another thing, they're getting into CPU or TPUs and GPUs, basically, to fill the void that NVIDIA is leaving, because NVIDIA can no longer send their chips to China. So Alibaba is going to be making some, apparently. They make good net income. We've converted the currency from Chinese yuan to USD. They make $5 billion in net income a quarter when we kind of average it out here. Hey, what up, Mikey? Hope you're having a good day. Dude, Bitcoin is only real asset. Hey, what up, Ryan? Let me see here. Celery said ATRO stock. This is Astronics company. Check that out. I mean, they've done great the past year. They're technically the same price as they were in 2007, but the past year they've had some incredible growth. So yeah, they're an aerospace company. Looks like the aerospace business has seen some nice growth. It's up 10% after it grew 11, after it grew 44, after it grew 25. So they're continuing the growth. They're profitable though, so they're still struggling with net income positivity. But oh wait, the sales are only up by 3% year over year. So the aerospace business grew by 9%. But if we go to the test systems, this fell a bunch. That's what averaged it down. That fell 50% year over year. So that used to be 10% of their business. So it's kind of like a mixed bag here. So you're really watching the aerospace numbers. Okay. Mikey said JEPI. Yeah, this is one of your covered call ETF plays. So this is one of the lesser worst covered call ETFs. But again, this ETF is the same price that it was in 2021. Since 2021, the S&P 500 has more than doubled. So you've definitely underperformed the market, but you're buying this to maximize your income. You get an 8.3% yield. Kind of notice the annual payouts slowly kind of go down every year just because the nature of these. But you buy it to maximize your dividend income, and they're one of the more sustainable, better ones. But still not one I'd recommend if you're like 10 years away from retirement. which app is this? Yeah, hey, by the way, this is a brokerage where you get stocks on. Again, if you want to, or all these are brokerages where you buy stocks on. If you want to get any of these, they're all in the link tree in my bio. They're all affiliate links too, full disclosure. So if you go and like deposit $100, we'll both get like some free stocks and stuff. Okay, so Jeff Mack, yo, the legend's here. Shout out to the member, Jeff Mack. Hope you're having a great Sunday. He said EXPE stock, Expedia. Yeah, isn't that like the travel company? Or I didn't even know they were public. Let's go look at their numbers. They're a $27 billion company, and they're trading at 26 times net income. So they're trading at a fair multiple. Business to consumer, B2C, and then business to business, B2B. Oh, actually, the B2B is growing like crazy for real. That's actually that's double digits. That's up 15% after it grew 21, after it grew 33. That's really interesting, the growth there. And then they own Trivago. I feel like I've heard of that before. It's heard a commercial for that. But yeah, if we go to net income right here, let's see. They had a little one-time, well, actually, no, not a one-time adjustment. It looks like Q1 is the it looks like they lose net income every single Q1. But if you average it out here, if you average out for the 4 quarters, they're actually making basically 250 to 300 million of net income a quarter, even when you average it in that loss that they made. Dividends, you get oh, look at that. Oh, they cut the dividend actually. Wait, they just brought it back though. August 2025, yeah. They just brought back the dividend, so you get a 0.3% dividend. Looks like they're like a booking.com play, maybe in a lower interest rate environment as well. Oh, dude, why try not to spam there, man? Hold on. Oh, that's not cool. Bro filled up the whole chat spamming his message. Okay. So here's Expedia. Revenue's a bit slow growing. Actually, wait a minute. Let me fix this. I didn't realize that. I didn't realize my phone had disconnected from the Apple Play. That's not good. Is this Bloomberg? No, hey, this is a brokerage. My app might have just broke on me, so let me try this real quick. Please, phone? Please? Hold on, bear with me here. I'm so sorry, guys. Hey, by the way, if you wanted the follow button, we stream every single day. This is our second stream of the day. Oh, it actually worked. Okay, we're back. Thank goodness. Okay, so Expedia, the sales are a bit slow growing, like 6%, 3, 10, 3, 5, but maybe in a lower interest rate environment, this one will start to grow a lot more. So that's interesting. They kind of remind me of like a BKNG, like a Booking Holdings, a Booking.com. This stock has been an absolute monster of a performer. They do insane share buybacks, insane dividends, great moat. They print a lot of net income as well. Let's see here. Net income. Yeah, they're making crazy, almost $1 billion in net income a quarter if you average it out here. So actually over $1 billion in net income a quarter. But yeah, that B2B business on EXPE was crazy. So user said SPGI, yo, S&P Global, yo. So check this out right here. Actually, speaking of, this is one of the credit rating companies. It's kind of like a shared oligopoly with Moody's, companies getting their debt or their basically company credit rated. So yeah, their rating business is big, their market intelligence. If we go to this brokerage I'm on right now, if we look at this number down here, you see the analyst expectations we get, the orange line. If you look kind of right above it, it says data from S&P Global, and not just because we're on S&P Global stock. It says that on every company, but yeah, they license out their analytics and data, commodity insights, indices. Hey, Isaiah, dude, no way. Isaiah, thanks for all the gifts there. I really do appreciate that. Yo, if you got a stock you want me to look at, Isaiah, let me know. Sorry, the chat kind of got spammed there. But yeah, dude, thanks so much, Isaiah. Hope you're having a great Sunday. Thanks for the October and the hearts. But yeah, that's S&P Global. The growth has slowed down a little bit. Like if you go to the revenue, it's single digits, 5%. This quarter, 5.8%. But the net income's still great. They're easily making $1 billion in net income a quarter. If we look at the net income is up by 6.9, but the net income per share is up by 8.4 because the share part of the ratio went down. They bought back 1.5% of all the shares, and you get in your 1% dividend of 0.8%. That's cool. Yo, I've been cold all day, but for some reason it's super hot in my room now, and that's weird. Okay. All right. Hey, Ven Fabio said ITB stock. Oh, wait. Then we'll look at DFDV after this. Yeah, we'll check that one out too. So here's iShares US Home Construction ETF. So yeah, I'm guessing this owns a lot of the home builders. I do like the home builders. This probably has a decent yield as well, but the home builders do crazy buybacks. So yeah, this is what Warren Buffett is buying. Warren Buffett just bought DR Horton, Lennar, Pool Corp. So yeah, this is a super interest rate sensitive sector. I actually really like this. A 1.5% dividend. The dividend just like hopped up a bunch. But yeah, I actually really like that ETF because usually the home builders have high yields, low dividend payout ratios, low PEs, and if we actually go to the interest rate cut probability tracker right here, if we go to markets, the rates are supposed to come down very quickly, and Buffett is kind of betting on this as well. If we look at the October 29th meeting, 96% chance of a 25 basis point cut. December 10th, 95% chance of another 50 basis point cut after that. And then just based off the Fed dot plot expectations. But yeah, that's pretty cool. The interest rate sensitive sector. And if we go back to the Buffett thing right here, if we go to Warren Buffett's portfolio, or basically the Berkshire Hathaway most recent changes, if we look, newest position, he bought United Healthcare, but he's buying more of Pool, super interest rate sensitive, Lennar Corp, and DR Horton, which is kind of cool. Okay, so yeah, hey, thanks again, Isaiah. He said DFDV, and then we'll look at SoFi before earnings. Oh, is SoFi next week? Really? APLD as well. Yo, we gotta look at APLD as well. What's up, Ryan? So, this Monday, SoFi reports. Oh, it's on Monday. Wait, that's crazy. So here. This isn't SoFi. This is DeFi right here. So a small company, they're worth $400 million, but they're actually on my watch list. There must have been something I liked here because if you go to the revenue was it just jumped up to 2 million. So they did 2 million of revenue. They lost money on that. So they lost money. But they have a great balance sheet. Looks like their balance sheet just went from 4 mil of assets to 107 mil. I wonder why I put them on my watch list, though. What are the analysts expecting here? Revenue, 3 mil of revenue. I don't know about this one. Nothing's really blowing me away here. Maybe there was some news I liked about this name. I forget. Crypto, treasury, a stable coin play. Anyway, I don't know. I'd be careful with that one. What website is this? Hey, again, this is a brokerage. It's where you get stocks on. If you want to get it, it's in the link tree in my bio, the very first link there. Hey, what up? Tacos, what's up, dude? So should I buy NVIDIA and AMD today? I wouldn't buy NVIDIA or AMD at their current valuations, or certainly not with anything meaningful, just because the valuations seem too high to me. Remind me to look at SoFi. I do want to get to SoFi. But if we go back to the actual NVIDIA portfolio right here, I'd rather buy the NVIDIA beneficiaries. Hey, thanks for the gift, the roast there, Taco. So yeah, if we go to the NVIDIA portfolio, their largest holding, of course, is in CoreWeave, but their second largest holding is APLD. They just gapped up on earnings, and they actually deserve to gap up on earnings, I think, because it was a good beat. Usually you can understand why a stock either gapped up or gapped down so much on earnings just by looking at what they reported versus what the analyst expected. And this is what the orange line is. The analyst expected 45 mil, and they reported 64 mil, a huge beat. They didn't just beat on top line, but also bottom line. Analysts were expecting them to lose 13 cents. They only lost 7, 100% beat. So that's this is a data center hosting business, high performance compute business. So anyway, yeah, that's APLD. I wouldn't touch them at this price, but NVIDIA owns them. Data center play if you're looking for exposure to data centers. So Slice of Zard, what up, dude? He says it's Solana exposure. FD or DFDV is Solana exposure. Oh, hey, thanks for that, man. So yeah, SoFi, let's see, does it actually report on Monday? Wait, October 28th on pre-market. So in 2 days, I think SoFi reports earnings on the 28th. Here's what I love about this name. We're specifically going to be watching their financial services because this is the main growth driver behind them recently. If you look at this, the financial services revenue is up 105, after grew 80, after grew 222, after grew 260. Like, this business is so growthy. No analysts were expecting that sort of growth. We can see the analyst expectations. They beat every quarter on revenue, beat every quarter on net income, beat every quarter on EBITDA by a good margin. They made 100 mil in net income. People are really taking SoFi serious. And full disclosure, I I do own SoFi. Hey, we're up. Oh, we're up 5x now on SoFi. They had a new 52-week high right now. Well, anyway, yeah, we're up 5x on SoFi, which is kind of cool. Wouldn't touch them at this valuation, certainly. They legit traded 80 times next year's net income. So certainly there's a lot of stocks I want to pay at their current valuation. AMD, Robinhood, SoFi, and also Robinhood and SoFi are two stocks I regret every share I've ever sold to those two. They are great companies. So is anything down right now? Yeah, Axon's down a little bit. What platform are you looking into? Well, hey, yeah, all these platforms are, I'm guessing they're all in the link tree in my bio. Not sure which one you're talking about. We also have the Roth IRA right here. So no way. Hey, Mikey is on. Dude, Mikey with the money gun. Dude, thank you very much, dude, Mikey. I hope you're having a great Sunday. If you got a stock you want me to look at, let me know, Mikey. He came from the YouTube stream and the TikTok show. I can't believe it. Dude, thank you so much, Mikey. I do appreciate that. Let me know if you got another stock you want me to look at. So let's see. Charlie said GLXY. I think that's Galaxy Digital. I have to send this to annoy. Oh, hey. We'll check those out. The Yield Max ones too. Yeah, let's do it. So I don't have great things to say. And thanks for the pumpkin, dude. Yeah, I wouldn't buy SoFi right now. If you buy SoFi right now, you're pretty much betting into earnings and the valuation. The risk to reward just doesn't look great on SoFi at its current price, in my opinion. So here's Galaxy Digital. I think they're another crypto play. They just IPO'd like 6 months ago, so there's not too much data we get behind this company. Whoa, they do a lot of revenue, 28 billion. Where are they headquartered? In the US. So crypto mining and capital markets, digital assets. So there's some sort of crypto play as well. It says they made 500 mil of net income this quarter, and that was real. And there's a lot of more research I got to do on that name. So, dude, Mikey with the other dude. Mikey just donated so much, dude. Thank you so much, dude. JP, let's check out this one. JPMO. This is the Yield Max JPM option income strategy. So these you buy to maximize your dividend income because they sell calls. So if you go to the dividend, yeah, you get a 32% dividend yield. And you get paid that dividend monthly, which is crazy. So yeah, there's that one. That just sells calls on JP Morgan stock. And there's also Yield Max, which this one it kind of combines a bunch of different covered call ETF strategies. So this ETF owns a bunch of other ETFs that just sell calls. It sells calls on Carvana, Amazon, Snowflake. Again, these kind of are just like a slow bleed of your capital. We're looking at all these covered call ETFs combined, right? We're looking at an ETF that holds a bunch of these ETFs. And as we can see in the long run, that's kind of what it does to your capital. Again, you buy to maximize your dividend income because the dividend's cool, 67% yield, but you can't trust it permanently. Hey, no way. Dude, shout out to that one dude with the $5 super chat on YouTube. Yo, you're always here, that one dude. I really do appreciate that. You have inspired me to start investing. Yo, I'm so glad, that one dude. Yo, your future self will thank you. Again, by the way, I don't sell anything. I have no course book, WhatsApp, but the goal of investing isn't really to get rich quick. It's to slowly build and preserve wealth. Like you start with $100 and you want an 8% to 10% CAGR. You start with $100 and it turns to 110, then 110 to 128, 128 to 190, and then it just snowballs, kind of keeps on going higher. Hey, Tommy, what up, Tommy? Hope you're having a great Sunday too. What's up, dude? PCSA earnings next week. PCSA. Yeah, we get a lot of interesting earnings next week. We can actually see that real quick. If you just go to the earnings hub up here, actually I can sort by watch list just so it only shows the companies we have on our watch list. But yeah, on Tuesday we get United Healthcare, PayPal, but Wednesday's crazy because we get Google and Meta, our two dogs, Google and Meta. And then on Thursday we get Amazon. So a lot of big stuff next week. It's definitely going to move the market, and the market's already green so far in the pre-market. Check this out. Actually, you're not going to believe this. If we go to the Qs, where are the Qs? The QQQ right here. Look, so it was already at an all-time high on Friday, but if we go to the overnight market, we gapped up like crazy. We're already up another, basically 1%. So congrats if you own stocks. We're probably going to be green as heck tomorrow. So let's go. All right. So. Yeah, APLD was screaming in my face around 10. Yeah, that one was cool. UTI stock, UTI, Universal Technical Institute. Well, check that out. They're at an all-time high. That's insane. Yo, congrats if you own this stock. Hey, Nick, we'll get to Visa after this too. Yeah, I love Visa. So a $1.88 billion company. The stock's pretty close to an all-time high. So yeah, congrats if you own that one. Got to be up on your position. Even at all-time highs, they only trade at 29 times net income. Universal Technical Institute, the sales are up 12% year over year. And Concord, whatever Concord is, that's also at a record. They're beating on expectations every quarter. You know, that's the orange line. They beat on revenue, they beat on net income, and they beat on EBITDA. If they've been doing that every single quarter for the past 3 quarters. So no wonder every single time on earnings they gap up because they just beat so much on expectations. And they're making net income every quarter. So it's a profitable company with insane growth rates. Sales are up 15, but the net income's up by 100. So they're expanding margins. They're making cash flow every quarter. I'll actually put them on the watch list just because I'm curious. What industry is this? Education and training. So it might be like an actual school or something. I don't know. Guess they're for profit. Well, there you go. That's interesting. A niche kind of industry. Didn't know UTI was public. Yeah, I didn't. That's interesting. What is this one? LIV. Oh, wait, there was another stock I wanted to look at by Nick. Yeah, hey, try not to spam in the chat there. Yo, hold on there. What's this other stock? Hello? Oh, so Visa stock. Wait, I type in LIV and I don't see a stock. Oh, wait, no, I'm slow. ILV. Wait, ILV. This is the Invesco S&P International. I don't know what this is right here. We don't get any data. I can't find this ETF right there. It's not a US ticker symbol, so unfortunately I can't give you any thoughts on them. So anyway, actually, let's go to Visa right here. You know, I do love Visa. If you go over here, they're actually in the Nancy Pelosi portfolio. You know, these super investors have to make all their trades public by SEC law. If you go to the Pelosi tracker right here, one of the stocks she owns is Visa. They have a shared oligopoly with MasterCard. And hey, again, thanks so much, Mikey. You just donated like 20 cats. But yeah, oh, this app is telling me, what is this right here? They're saying that there is a bearish flag. So there's a bearish flag forming. But here's what's cool about Visa. This is why they're a never sell stock. I mean, they're worth buying. If you have the intention to never sell it, they're worth buying even right here. Check out the net income they make. You know, the small little micro credit card transaction fees that are slowly bankrupting us are making Visa a bunch of money. Pretty much over $5 billion in net income a quarter. So what is Visa doing with $5 billion of after-tax net income a quarter? Well, they also pay a dividend, and the dividend only cost $1.1 billion. So the dividend only costs $1.1 billion. So what are they doing with all their leftover money? They're spending $4 billion a quarter on share buybacks. Absolutely insane. So here's what the share buybacks do for you as an investor. If you go to the net income is up by 8%. So the net income's up by 8%, but the net income per share is up by 12 because the share part of the ratio went down. Again, the EPS growth rate and the net income growth rate should always be the exact same, but the share part of the ratio went lower. Again, whenever they buy back their own shares, that makes the EPS artificially go up higher, which makes the PE ratio artificially go lower. It gives you more ownership in the company, makes the cost of the dividend go down. So in short, whenever a company does share buybacks, it pretty much forces the stock to go up. Kind of cool. Okay, so what app is this? Yeah, hey, by the way, this is a brokerage where you buy stocks on this stuff. If you want to get it, it's in the link tree in my bio, the very first link there. So yeah. All right, so yeah, Visa is good. I like that one. Which one should we look at here? They air them all the time. Oh, hey, maybe BMY stock. I think that's Bristol Myers Squibb. It's some like health insurance company, or maybe they sell prescriptions. Well, either way, I feel bad if you own this stock because this stock is the same price that it was in 1997. So if you bought the stock in 1997, it's no longer, or it's the same price that it is today, unfortunately. So it looks like, well, let me just check out the growth down here. So revenue, so a bit of a slow grower, you know, single digit, 0.5, -5, single digits. But they are making net income every quarter. This is great. They're making $1 to $2 billion net income. But I remember one of the reasons they tanked is because I don't know what happened here, but they lost $12 billion. It was actually a little bit more than that after you include the money that they made and some adjustments. But it's back now. They're making $1 to $2 billion a quarter, which is good. So that's how they sustain their 5.6% dividend yield. So yeah, basically you're buying this for the 5.6%. You want 6% in dividends, and then you're hoping for 2% in stock price appreciation or something, but you haven't really gotten that. Let's see. Is there a school to learn all this? Not really, Royal. I mean, well, or I just mean I don't have one. Like, by the way, I sell nothing. I have no course book, WhatsApp, Telegram. Nothing like that. I'll never follow you, DM you. But hey, if your best way to learn is just watch the stream. Subscribe to my YouTube channel, watch my YouTube videos. But yeah, my YouTube channel is called Nathan Robert. All right, so let's keep going here. All right, what stock should we look at? Ooh, hmm. Buru, yeah, I saw some people ask about this one, but I don't know where people are finding this ticker symbol from or where they learned about this stock, but I would not touch this. But I don't blame you. There's just a lot of momentum around this name. There's, I guess, some sort of like momentum. I don't know. I wouldn't touch this one. Here's why these are just not stocks you really want to touch. If you look in the top right, the market cap, this whole company is worth 52 million. So kind of remember that in the back of your mind. The whole company is worth 52 million. This is a revenue-less company. The revenue was 9,000 the last quarter, but then it's zero now. When it's zero, it doesn't include it here. So the revenue is zero. It's a revenue-less company. They sell nothing and they lose. Remember, the whole company's worth 50 mil. They lost 12 mil. 16 mil, 11 mil. That's whenever you lose 12 mil, that's 25 or that's 20% of your market cap. And look at this balance sheet, dude. They have no assets. The assets are 2 million and they have 47 million of liabilities. So from a financial point of view, I wouldn't touch this one, but maybe if you want to do some short-term swing trade, because there is volatility around it, maybe it could be interesting. But yeah. Look at the Neil. They got some. Oh, Georgie said they got some sort of new deal. So maybe you could look into that. But I wouldn't trust anything meaningful in that amount. What app is this? Yeah. Hey, by the way, again, if you want to get, this is a brokerage where you get stocks on. If you want to get it, it's in the link tree in my bio, very first link there. It is an affiliate link too, full disclosure. So if you go and deposit $100, we'll both get some free stocks. By the way, all these brokerages are all linked in the link tree in my bio. Not sure which one you're talking about there, but yeah, my favorite app to buy stocks on. If you need to buy stocks, or if you want to buy stocks, you need a brokerage. Out of all the brokerages, I like this one the most because it's free, costs nothing, no commissions or anything. So yeah, link to my bio, very first link there. Okay, so Isaiah said Eli Lilly. I love looking at this stock because this is a great company to never sell. Probably a good buy would maybe be around under 750. I'd nibble at probably around $750 a share, and then they were just there. That's the crazy part. They were just there. But they sell a bunch of different prescriptions. This is what's so impressive. This is why I love Eli Lilly, and I think they're just going to continue to climb up higher, without any weird regulation issues. But if we go to their main prescription right here, Mounjaro, the growth is nuts. They literally created this in 2022. It was 16 mil of sales. Now it's 3.8 billion. It's up 112. After grew 217. After grew 6,000. Insane growth, and that's just one prescription. They also have their Zepbound, which is a competitor to Ozempic. It's a weight loss prescription. They created this one in 2023. It was 175 mil. Now it's 2.3 billion. They literally just create these prescriptions out of nowhere, and then they just get a bunch of sales. So all these other ones too, what is Jardiance? That's 8% of the revenue. Look at that. It's up 47 after it grew 18, after it grew 37. So it's like you're not just concentrated on one prescription, on one thing. You get a whole bunch of prescriptions here, which is pretty cool. And they're making a lot of money on it. If you go to you want to look at the operating profit because of that little one-time adjustment here. But yeah, insane operating profit, basically $5 billion plus in net income a quarter. Could you see AbbVie getting that high too? Yeah, AbbVie, dude. AbbVie's basically the same thing as Eli Lilly, just a bit tinier, just as growthy. But this one has a higher dividend yield. This one might not perform as well as Eli Lilly just because of the dividend, but I'm telling you guys, I actually just bought my first ever share of AbbVie. If this stock gets back to $215, $220, probably closer to $215 to $210, I'm going to probably buy maybe 1,000 or so of the stock. Just because they're so safe. They're like McDonald's, where even if tech falls 10% or we're in a recession, AbbVie and McDonald's still just crank out 7% plus returns a year. 3% dividends, 3 to 4% stock price appreciation, just always in the long run. So let's see here. Nebius, Let's do Nebius stock. Nebius, that one's actually in the NVIDIA portfolio. If you go to the NVIDIA portfolio right here. Oh, what up, Super? We'll look at PayPal after this. Do you buy crypto? I actually do not buy crypto, MEH. Or actually, I kind of regret that because Bitcoin's done so good. But yeah, if we go to NVIDIA's portfolio, they own a bunch of CoreWeave, APLD, ARM, and then they own some Nebius. Again, just because NVIDIA owns a stock doesn't mean you should. You should always go do your own research on it. Oh yeah, Nebius and Uber invest $375 million into AV Ride. They're planning it's basically a robo-taxi service that delivers you food where you just pick up the food in the car, which I don't think people will mind doing. If it costs legit, that's how Uber's going to make a bunch of money in the future, probably. I don't think the consumer care to just walk up and just go to the empty car and pick up their food. If it costs them like 20 to 30% less than with a human driver when they buy it. Anyway, that's some little like speculative investment. That's not even what this business does. It's mainly a GPU server company, because part of the Microsoft Azure cloud is now going to Nebius. Microsoft gave them a $17 billion deal. That's one of the reasons they gapped up so much when it was an earnings day. And even before that deal, they've already been very growthy. If we look at the revenue went from 14 mil to 100 million. I mean, a huge growth in the revenue. And it was 100 mil this quarter, in legit 2 quarters. Analyst expectations right here, they're expecting 265 million in 2 quarters. So there's just a lot of future growth expected. It's a growth company. So interesting. They're still losing a bunch of money, but as long as they keep up that growth rate, that's very interesting. So let's pull up PayPal right here. Hey, what up, Super Garage? Good to see you, man. Dude, donut stock, DNUT. Yeah, hey, maybe we'll look. Yeah, remind me to look at that one. Maybe we'll get to that one at the next. So here's PayPal right here. Unfortunately, this stock is the same price that it was in 2017. They kind of look like a DocuSign, a Peloton, a Roku stock, where they peaked in 2021 and just been down since. And honestly, they're probably fairly valued right here. Like, they kind of deserve to be doing this bad, unfortunately. Like, if you go to their valuation, they trade at right now 15 times net income, or 15 PE. They probably deserve that valuation for a single digit, kind of slow growing company. If we go to the revenue, the sales are only up 5% year over year. Last quarter, it was up 1, then 4, 5. So, single digit growth rates, I don't love that. But the thing I do love about PayPal, the real value, I think, why you want to buy this one, is because of the fact that they're making $1 billion in net income a quarter. So they're making $1 billion in net income a quarter. If we go to see what they're doing with all that net income, they legit spend 1.4 to 1.5 billion on share buybacks every quarter. This is the crazy part. So if you go to the net income is up by 12, but the net income per share is up by 19. Again, because the share part of the ratio went down. So it makes the EPS go up even more, which makes the PE ratio go down. So maybe they'll pay a dividend one day. Who knows? But I wouldn't have them as a huge size position. I don't know if I'd expect them to outperform the market in the long run, but I love the share buybacks they're doing. Pretty cool. Okay. Be careful with prescription companies. Yeah, the administration is trying to lower like the GLP-1 cost and all that. Yeah. All right. So what stock should we look at here? There was a stock I want to look at. Burned out blue collar dude said, can we look at ORLY? Let's look at O'Reilly. Yeah, they actually had a little fall recently, but I love their business model. Even in a recession, people still got to get their car fixed or oil changed, whatever. So it's something that people always are going to need, car parts. If we go to their net income, this is the best part. They're easily making 500 to 700 million of net income a quarter. And what is O'Reilly doing with 500 to 700 million net income a quarter since they don't pay a dividend? Well, the main value here is actually the share buybacks that they're doing. I can't find it. Maybe they're... Oh, I'm on the balance sheet. Dude, I'm an idiot. Okay, I thought I was on the cash flow statement. So yeah, if we go to their share buybacks, this is the best part. They legit spend pretty much 60 to 80% of all their net income on share buybacks. That's the real value here. They don't let the stock go down. They just buy back their own shares like crazy. I love companies that do share buybacks. Same with, what's the other company? AutoZone. AutoZone and O'Reilly just plow all their money into share buybacks. It's kind of what the rule is. Yeah, I'm not sold on PayPal growth story. Yeah, I just don't know if I don't know if I see PayPal outperforming the market in the long run. What idea for PayPal? They should buy a company. I remember they own Honey, they own Venmo, but I think they should acquire a business. Instead, they legit in the past year have spent basically $6 billion on share buybacks. Imagine they bought a company for $6 billion. Like, that's a lot of money. I mean, they could have bought, it's completely irrelevant to their business, but they could have bought they could have bought a whole Powell Industries. Okay. So Draco said CRM stock. So yeah, that's your Salesforce, CRM, basically customer relations management play. They own Slack. If anyone's heard of Slack before, like Amazon uses Slack, like so much of the S&P 500 uses Slack. So let's see. If we go to their numbers right here, this is what I like about Salesforce is that they're making good net income. If you look at the revenue's up 10%, but the net income is up by 32%, meaning they expanded their net margins and went from 15 to 18, which is great news. You get a dividend to a 0.6% dividend yield. Let's see, is there any weekly news? AI-powered contact center solutions with Salesforce integration. Okay. So yeah, Salesforce is just, your main software play out there. A lot of the software names like Adobe, Salesforce, they're all getting hurt kind of by the AI thesis. So yeah, honestly, I think Salesforce is worth looking into. I'd nibble on them. Hey, what up, IMO? How's it going, man? O'Reilly and AutoZone, basically the same. Yeah, pretty much. Their stocks look identical. Someone said, do the S&P 500. Yeah, hey, this is just an ETF right here. An ETF is just a basket of stocks, breaks your money up for you into the top 500 companies in the US. I would totally recommend this. Like, have this as the backbone of your portfolio. Then go buy some individual companies, NVIDIA, Microsoft, Apple, Amazon, Meta. I own a lot of the S&P 500 individually. I own a lot of those stocks. Like, literally, if I go over here, actually, every stock in here is in the S&P 500. But yeah, I own Meta. I own Google, McDonald's, United Rentals, Constellation Energy. I own Amazon, Coca-Cola. So someone said, look at KO stock. So I actually own the Coca-Cola bottling company, ticker symbol COKE. But then there's also, that's not the one owned by Warren Buffett. If you go to Warren Buffett's portfolio right here, he owns ticker symbol KO, this Coca-Cola. They actually had earnings and they gapped up on some good earnings. Another kind of recession resilient play. A nice dividend growth company. If you look at the dividend, you get a basically 3% dividend. They slowly raise their dividend every year, but they have a 3% dividend yield. And if you go to their net income, it's super consistent. They're easily making $3 billion to $4 billion of after-tax net income a quarter, which is great. So here's what you're kind of hoping for. You get the 3% dividends, and then you're kind of just hoping for 3% stock price appreciation. I will say I do not expect Coca-Cola to really outperform the tech-heavy S&P 500, but you should get a sustainable like 6 to 7% yearly return on average. So yeah. Bernardo said, what app are you using? Oh, hey, yeah, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. Yeah, this is a brokerage, or actually, I'm not sure which app you're talking about. By the way, all these are brokerages where you buy stocks on. All of these are all in the link tree in my bio. Out of all them, I would get Moomoo. This is my favorite one. The first link in the link tree in my bio. It's free, no commissions, costs nothing. Okay. And it's the one I love the most. Okay, so let's see. Stock said, "Go Big Bear." Hey, I think you're talking. I think you mean Big Bear AI, or he said, "Get some SoundHound and Big Bear." Oh yeah, those are stocks. Yeah, SoundHound AI. This is an interesting one. This is like your audio subscription AI play. Check this out right here. Here's the thing. If you're a shareholder of SoundHound AI, there's one metric you really want to watch on this company, and that is. Get this to load here. There's the metric you want to watch for this company is their subscription service right here, because this is what's been blowing up. This used to be a nothing burger, 400,000 of revenue a quarter, nothing. But now in the most recent quarter, it's 32 million, up from 3 million, up from 400,000. So they're just on a growth streak, and, subscription revenue, it's all reoccurring. So yeah. And if you go to the revenue, this is what I hope, we want to see this continue, this crazy growth rate, because they are still losing, 40, 50 mil a quarter. But at this growth rate, what's it going to be the same time next year? The one he gets the best. Hey, what up, Dino? Yeah, hey, link tree in my bio, very first link there. Yes, sir. Yeah, they're all referral links, full disclosure. So yeah, if you go and deposit like $100, we'll both get some free stocks if you want to get any of these brokerages. But yeah, the one I'm on right now, best one, link tree in my bio, first link there. My opinion. Okay. How will you handle a 30% market drop? By buying the dip. I'm ready for a 30% market drop. But if the S&P 500 falls 30%, some of these quantum names, these like nuclear stuff, they're gonna collapse like 50%. Okay. Hey, One Hall said Figma stock. Let's do Figma, then we'll get to Astera Labs. Then we'll get Nike. Nike's okay. Beware of legacy software with AI running wild. Hey, yeah, that's a good point. They're saying in 10 years from now, will we need Photoshop? Will we need Adobe as much? So here's Figma right here. This is actually one of the competitors to Adobe. Um, I think Adobe is a funny story. Adobe tried to buy Figma, but then the UK or actually the EU regulators didn't allow it. And now they're going public. So let's check out their numbers right here. They're making great, yeah, revenue's up 40% after grew 49. They're on a streak of growth and they're net income positive. It's hard to tell because that won their IPO fee, but they made 30 mil, 44 mil, 100 mil of after-tax net income. So with a really good balance sheet. So they're actually on my watch list. I really like this one. I actually know someone who made an app in the App Store using Figma, so kind of cool. Ooh, so yeah, let's look at Astera Labs too. So Astera Labs, this is one that's also on my watch list because the numbers are good here. Like if you like a company, hey, sports, stocks and sports, dude, thanks so much for the gifts there. I really do appreciate that. I'm surprised we haven't had a correction. Yeah, me too. Me too. I mean, I guess there's just no catalyst stopping this market from going to all-time highs. I guess the tariffs aren't enough. So yeah, we're actually at the QQQ and S&P 500 are both at an all-time high right now in the pre-market or overnight market. But here's Astera Labs. This is one I would put on the watch just because this is the kind of stock that I think is just going to continue to climb higher. Now, one bad news. Oh, here's actually some cool news. Astera Labs to acquire AIX Scale Photonics. So they're acquiring a company. But one of the exact reason they gapped down this day, if you look at when they gapped down, is because they actually had a huge partnership with ARM, the chip company. And it was seen as a lose for Astera Labs, but a win for them. So that was kind of weird. But here's what I love about them the most. If you look at the revenue's up 150% after it grew 600%. So they're growing their revenue like insanely. The revenue just hits a new record every year, every quarter, not just top line, 190 mil of revenue. 51 million of that was after-tax net income. They did 32 mil last quarter, 25 mil. They also have a phenomenal balance sheet. Like this is insane. Legit, they have $1 billion of cash, no debt, and that cash on hand made them 11 million of interest. So that goes straight to the bottom line. That's insane. They beat on expectations. They were expecting 172, where they reported 192. So they're good. They're on my watch list. Hey, Bernardo said, what do you think of Micron? Yo, I love Micron stock. So yeah, Micron, I think this is one like, oops, even though the stock is pretty much at an all-time high, or it is at an all-time high, I wouldn't take profits on this one because the multiple isn't crazy stretched yet. If you go to the PE, which is price to net income, they trade at 28 times PE. And if we go to we compare that to the industry average, of 49, you look at AMD, Broadcom, NVIDIA, they're all crazy expensive. Well, here's another company that's in the same industry that's just as growthy, but still at a pretty fair, multiple, cloud memory business, mobile and client business, core data center business unit. But yeah, if we go to their sales right here, the revenue, it had just loaded. What'd I do? Oh, well. Well, if we go to the net income, record net income quarter, 3.2 billion of net income this quarter, up 260% from the previous year. And if we go to the revenue, revenue's up 50% after grew 93. So they're on a streak of growth, streak of net income. Net margins are expanded. Their net margin went from 11 to 28. I mean, that goes straight to your bottom line. Insane. So yeah, actually, Micron, I wouldn't take profits on them. What app is this? Yeah, hey, again, by the way, if you want to get this app I'm on, this is actually a brokerage software where you buy stocks on. It's in the link tree in my bio, that very first link there. So all in on Beyond Meat. Yeah, hey, I don't love this company right here. It seems like America has responded no to plant-based meat. They lost. There used to be Beyond Meat nuggets at KFC. There used to be a Beyond Meat McPlant burger at a McDonald's. Like, this isn't a good company, but what I do like around this name is the momentum because there's a lot of momentum around this name right now, but I couldn't trust this one. There's pretty high bankruptcy risk here, unfortunately. I'll just show you what I mean here. If we look at the top right, the market cap, hey, what up, Calvin? This whole company is worth 860 million. So the whole company is worth 860 million. And here's the tough part. They legit lose 30 to 50 mil a quarter. Like just in the past year, they've lost over 200 million in net income. The whole company is worth 800 mil, so that's 30% of the market cap. And they're super leveraged. They literally have twice as much debt or twice as much liabilities as assets. How are they going to pay off all that debt while they lose net income a quarter? And they're not even growing. If you look at the revenue is down 19 after it fell 9, after it fell 15, after it fell too. Like, so, but again, that's why the stock is pretty much at an all-time low as well. But I wouldn't call you crazy if you did some sort of short-term swing trade on it. I guess you wait till 140. Hey, Michael, what up, dude? Hope you're having a great day. Then said URA stock. Yeah, that's the uranium ETF. So if you don't know if you want exposure to the uranium industry and you don't know which one to buy, you can just buy the ticker symbol URA ETF. My favorite individual uranium stock of all time by far would be CCO. They're a cool one. All right, so eating leaves can. Oh wait, WDC on a dip. Let's see. WDC, is that Western Digital? Yeah, Western Digital right here. Wow, the momentum has been nuts. So congrats if you own this name right here. The stock's at an all-time high by far. Earnings preview. When is earnings? October 30th. So we get earnings very soon. We can see the earnings move historically. So, all right, let's go look at their numbers right here. So hard disk drives is what they sell. HDD. This is good. That's actually really good growth. 30, 30, 40, 50, 150. So they're on the year-over-year comps are insane. And so is wow. So not only is the revenue super growthy, but the margins have been expanding. They're making a couple $100 million net income a quarter, up triple digits every quarter. Yeah, gross margins are expanding. Net margins are expanding. Free cash flows at a record. So there's just a lot of demand right now, I guess, for hard drives. Probably just from the whole AI ecosystem beneficiary. So yeah, man, that one might just continue to climb higher. They had the Impossible Whopper, I think. Oh yeah, hey, that one too. So, uh, ooh. Yeah, I don't think, well, Data Vault or DVLT, I didn't see much in this name right here. There was some sort of like Tesla partnership, but yeah, this stock is at all-time low. You're just paying for a lot of future hopium. It's kind of speculation. I wouldn't trust a lot of money or anything meaningful in this name. If you go to the revenue right now, I mean, it just hit 1.7 million. So it's actually their highest revenue quarter ever. So that's the good news, a highest revenue quarter ever. Let's see what the analysts expect. Yeah, analysts expected to go to 6 million and then 6 million again. So if you annualize that, that's going to be 20 to 30 mil of revenue a year. But I just be so careful around this name. But they are interesting. Is CTRE good for long term? Yeah, this is a real estate play. So, wait, CTRE. Yeah, this is a great long term play. Yeah, this is a real estate investment trust, a REIT. By law, they have to pay out 90% of their taxable income in the form of a dividend. So when we go to the dividend, they have a 3.55% dividend, and it's actually completely sustainable. They actually have room to raise their dividend. But I love them because they just bought this UK acquisition. If you go to their cash from investing activities, look at this. They spent 800 million basically this quarter buying this asset. But that's what explains the super growthy revenue. Revenue's up 63, 53, 45. No other REIT has this kind of growth. They're printing net income as well. So I just really like this, the growth here and the industry. Senior housing care facility. Yeah, I'm actually going to re-add them to the top of the watches. Oh, actually, I think if we go to comments right here, there should see one of my old videos. Come on, please load. There we go. Yeah, May 19th, I made a video about 3 high-yielding dividend plays. I went over Realty Income and Brixmor. Brixmor is another great REIT out there. Again, these REITs, real estate investment trusts, have to pay out 90% of their taxable income in the form of a dividend by law, and that's why they have these nice dividends. And that one is just really growthy. They're one of the more growthier ones. Okay, so, wait, let's see. I got some AMPX right here. AMPX. And then we'll look at Root. Sorry, we'll try and get to all these stocks. I want to get to Webull stock eventually. Someone said, what app is this? Yeah, hey, by the way, again, this is a brokerage where you buy stocks on. If you want to get it, it's in the link tree in my bio, the very first link there. But yeah, here's AMPX right here. Ampers Technology. They have been on an absolute streak of growth. They're on my watch list. I actually do like this company. I wouldn't buy them here. That's the thing. I haven't bought the stock here because, the risk to reward doesn't look great buying them after such a crazy rally. But check this out. They're a battery company, and they've just been experiencing a lot of growth. The revenue went from 3 million to 15 million year over year. So 15 million this quarter. Check this out. The analyst expected 12 mil and they reported 50 mil. And then in 2 quarters, they're expecting 20 mil. So they're beating on revenue every quarter. So if they're expecting 20 mil, they'll probably do 25, which if you annualize out, they'll be doing 100 million of revenue a year. They're still expensive here. So, but it's just a growthy company in the battery business. UEC is better. Yeah, UEC is a cool one. They bought a uranium mine off Rio Tinto. So JS Penn said Rootstock. This is one of your DTC insurance companies. So they were basically going bankrupt, but then they started printing money. They're making money now. Let me just go to their net income and share that. Yeah, so if you go to net income, check that out. For the past 4 quarters, they're easily making like 20 mil of after-tax net income a quarter. But yeah, if we go to what their revenue comes from, it's their DTC insurance products. And yeah, let me go to annual basis here. Check that out. For the full year 2024, it just kind of popped up to a new record there for over $1 billion for the first time ever. So looks like they've just seen a lot of growth. Yeah, they're beating on expectations every quarter. Analysts expected 338. They reported 380. They're making net income every quarter. So Root's kind of cool. Shoo. LUMN. Oh, that's the company with no. Yeah, that one. There's some sort of future contract. I wonder when that'll actually recognize. But yeah, all the numbers on Lumen look terrible. But there's some sort of future contract or some sort of future deal that'll help them out. I need to learn more about that. But I would just stay away from them. Oh yeah, hey, remind me to look at Clover right here. What's this? Hey, again, yeah, if you want to get this app I'm on, again, this is a software. It's a brokerage where you get stocks on, or actually all these are. I'm not sure which one you're talking about there, but yeah, all these brokerages are all in the link tree in my bio. But yeah, the one I'm using the most, this is my favorite one, lowest fee brokerage. Doesn't cost anything. It's free. Link tree in my bio, very first link there. It's called Moomoo. Yeah, you can just type it into Google, just called Moomoo. But yeah, link tree in my bio, first link there if you want to use my affiliate link. So Bob said thoughts on CLSK. This is CleanSpark. It's basically just a Bitcoin mining company. Oh yeah, so we have ClearedSpark pulled up next to Bitcoin. So to be honest with you, I would stay away from the Bitcoin mining companies because they don't outperform actual Bitcoin. I've looked at, and it's not just a CleanSpark. I've looked at all of them out there. I've looked at, or here, I'll show you this. CleanSpark right here, if we go to the company, where does the revenue come from? 100% of the revenue comes from their Bitcoin mining revenue. We look at Marathon right here. So it's not just that company, it's all the Bitcoin mining companies. So there's never a scenario, like realistically, there's not a scenario where I'd ever recommend any of the Bitcoin mining companies over actual Bitcoin because none of them ever outperform. I've looked at all of them, HUD8, CoreZ, Hive Digital, Marathon, CleanSpark, they just don't outperform. Thanks, all users link. Hey, thanks, DTY. I appreciate that. Thanks so much. Let's see here. Yeah. Oh, hey, what up, Luffy? What's up, dude? Oh, wait. Charlie said BAER. Let me look at BAER. Then we'll look at Monolithic Power. Then we'll look at Palantir. Yeah, I agree, Joe. Let's just buy Bitcoin. So and then we'll look at Clover. Yeah, CLOV2, Catherine. We'll get to that one. So here's Bridger Aerospace. So actually, yeah, this is a really risky company. If you look at the top right, the market cap, they're only worth $96 million. So an extremely small market cap. They're in fire suppression, maintenance, repair and overhaul, and aerial surveillance. So that's interesting. Fire suppression. I actually just bought a different fire suppression play, Perimeter Solutions. They're headquartered in the US. So maybe you can click on their website right here. Bridger Aerospace, aerial firefighting and special missions. Wait, this does exactly, yeah, they do exactly what, what's it called? Perimeter Solutions do. So that's interesting. An aerial kind of fire retardant play. We'll add them to the watch list as well. So yeah, fire suppressing is most of their revenue, which would be that aerial fire products. Anywho, yeah, look at these year-over-year growth rates. That's really impressive. The year-over-year growth rates are just crazy. So yeah. I want to start day trading is Weeble good. Yeah, hey, day trading. Yeah, I'd be careful with that. Most people can't outperform the actual S&P 500. But yeah, I do have Weeble. I do use them. Yeah, I have no complaints about Weeble. Yeah, I have, you can just buy stocks on any platform here. The one I'd recommend the most, though, would be Moomoo. A little bit, it's more useful than Weeble, in my opinion. All right, so, by the way, Weeble, Robinhood, Moomoo, they're all in the link tree in my bio if you want to get any of those. So, oh yeah, MPWR right here. So Monolithic Power Systems, first off, congrats if you own this one because this stock is at an all-time high. Like, that is just insane. So And they deserve it too because of how growthy they are. And analysts are expecting growth to just continue. Sales are going to go from 620 mil to 720, and they always beat on revenue every quarter. So expect it to maybe even be a little bit higher than that. We go to the net income. Yeah, look at this net income. They had a little one-time adjustment this quarter. You can just tell by the operating profit, but still super impressive. 100 to 200 mil in net income a quarter. An absolute fortress of a balance sheet as well. And you get a 0.5% yield, very safe payout ratios. So Monolithic Power, they're on my watch list as well. Actually, they're good. They deserve to be at all-time highs. Roberto said SGDM stock. What's this one? The Sprott Gold Minings ETF. So, by the way, you see that word at the top? I said minings. Last time I said that word, TikTok took down the stream just because I said that word, because they thought it was a different word. So anyway, that, by the way, best way to support me is just subscribe to my YouTube channel. It's called Nathan Roberts, and the link tree in my bio. TikTok's always like removing my stream from For You page eligibility and all this, taking down my stream. So hey, they've been better about it though recently. So shout out TikTok. But yeah, best way to support me though is just subscribe to my YouTube channel. I'm trying to build up my followers on there. It's called Nathan Roberts, also in the link tree in my bio. I'm streaming on there as well. So if you missed anything, you can replay it. And yeah, hit the follow button, hit the like button too. So anyway, here's SGDM, just a ETF that owns a bunch of gold mining companies. Yeah, like AEM, Newmont, Kinross Gold, Royal Gold. This one of my favorite picks out there. It's a gold royalty company. Legit, their margins are insane because most of their revenue comes from royalty. So yeah, their net margin, after tax net margin was a 63%. They also have a freaking fortress balance sheet. Anyway, that's an interesting ETF. Thanks for that. So I meant good if you already have. Yeah, AMPX is crazy. What up, Brian? Zero said ARLP. And hey, remind me to look at Novo Nordisk as well. So this stock is the same price that it was in 2005. So do beware. It looks like a commodity play, an oil and gas play or something. It looks like they are about to report earnings on October 27th. Notice the past couple of quarters, the orange lines with the analysts expect they miss on revenue. Dang, huge misses on revenue the past 3 quarters, miss on net income and on EBITDA. So they've been struggling the past couple of quarters here. Let's see. Yeah. So you're basically buying this to maximize your dividend income. They have a 12% dividend yield. Illinois Basin coal operation. Looks like a coal play. They're collecting coal royalties, oil and gas royalties. So at least they're, so yeah, they're just kind of just because of the whole oil and gas market right now. But sales are down 7 after it fell 7. They are good news. They're making net income every quarter, but can they afford the dividend? I don't think so. 12% dividend. Yeah, $2.80 of dividends. Yeah, they can't afford that. Yeah, so we kind of just want to see the growth come back. What are your top 10 recommended stocks in ETF that provide solid dividend returns? Well, hey, probably just all the stocks that I actually own in here. Again, these are all my dividend-paying stocks, and all these are also in the S&P 500. So yeah, I just buy the S&P 500, NASDAQ 100, and then just buy some of the individual stocks that you know and love in the S&P, like Meta, Google, McDonald's, Amazon, whatever, like Netflix, Spotify, whatever, invest in what you use that actually has good fundamentals. Coca-Cola, Ferrari, And I own all these. That's why I've been saying all these. So yeah. So, oh wait, hey, Cat3 said NE. Actually, let's pull up NE. This is NextEra Energy, the largest utility play or largest utility stock by market cap. So they have a great dividend too. They're in the S&P 500. If you live in Florida, most likely your utility bill is through this company right here. So you get a 2.5% dividend that grows every year. They own Florida Power and Light, which is literally just in the state of Florida, and they do $5 billion a revenue a quarter just from Florida, which is insane. They make great net income too. They had a little one-time adjustment last quarter. It says they only made 460 mil. They actually made close to 1.8 billion in net income. But yeah, they pretty much make 1.8 billion in net income a quarter. And they just share that with you via dividends and doing some share buybacks too. They're a regulated utility, so even if they don't get their 7% return a year, the government gives them that finished return. But also that's why they haven't been performing as well as some of the unregulated utilities like Constellation Energy, GEV, Vistra Energy, because they're able to raise prices so much right now when the other ones can't raise their prices unless they get government approval, when they can just charge whatever they want, like Constellation Energy and these PJM auctions. They've just been charging crazy prices because data centers want them and don't mind paying them. Aaron said Rocket Lab. Oh, what's about NEM? Yeah, they did Newmont. I wish I could give you more thoughts on this company, but it's basically just a gold mining company. They do pretty much exactly what gold does. It's like you get exposure to gold, and you get a 1.2% dividend yield. So not too shabby. Uh, So yeah, let's look at Rocket Lab right here. This is a space stock. I've looked at a lot of space stocks out there, and out of all them, Rocket Lab would be my favorite. ASTS is still revenueless, Lunar's trash. But look at this one right here. Here's what I love about this one. If you go to their space systems revenue, this is the growth you want to see. It's at a record. It's up 28% year over year. After it grew 94, after it grew 9, like they're on a streak of growth. And not just on that business, not just on their space systems revenue, but also their launch systems business. It's had a new record of 60%. It's never been even close to 46 million before. So insane growth on there. I would still be careful because they do lose like 50 mil of net income a quarter still, but as long as they can keep up this growth, I don't mind. Let's see if there's any news down here as well. Looks like Rocket Lab secures multiple launch contracts for Japanese Earth imaging satellites. Rocket Lab completes integration for NASA ETA space mission. Anywho, so they're certainly overvalued here. I wouldn't pay their current valuation, but they're super interesting. Hey, yo, shout out to the member Terrence down here. Yo, shout out Terrence. You just became a YouTube member. I really appreciate you, dude. Hope you're having a great Sunday, by the way. If you got a stock you want me to look at, let me know. I got you. We'll check it out. Um, let's see. Austria said Axon. Yo, I actually do own Axon stock right here. Yeah, hey, simulation. If you missed anything, you can replay it on the YouTube stream. I don't really have a specific list there. Sorry. But yeah, here's Axon right here. Yeah, by the way, my YouTube channel is called Nathan Robert. It's also in the link tree in my bio, but just type into YouTube Nathan Robert. I'm streaming on YouTube and TikTok right now. Those are the only two platforms. Yeah, by the way, watch out for people impersonating me. I'll never follow you, DM you. I sell nothing. I have no course, book, WhatsApp, Telegram, nothing like that. So yeah, only thing I do have is a YouTube channel. But yeah, here's Axon. This is your number one body cam play out there. Number one market share for little police body cameras. So they sell the body cameras and they have a cloud business. Now they're really overvalued. I'm talking like more expensive than Palantir. They trade at 400 times net income, but the growth is there. Just the profits aren't. But the sales are going to go, or they're going to hit 750 million next quarter. Connected devices, that's at a record. They're also the number one drone defense play. They own D-Drone, like the royal family of Qatar uses them, like so many different police stations in different areas. They have this, I almost want to pull up the disc. I almost want to pull up the little post I made about it. But anyway, Axon's really cool. But as much as I love them, they're super overvalued. 470 times next year's net income. I couldn't pay it. But I do own one share just as a starting size position. I'm up 2% on them. But yeah. Okay. Where do you trade? Well, hey, I trade on all these platforms right here. Not sure which app you're talking about, but yeah, I got way too many stocks for sure. I get that, but yeah, I have all these portfolios right here. Yeah, congrats if you own stocks right now. The overnight market is booming right now. Check this out. AMD's up 3, Futu 3, SoFi 4, Reddit. Like a lot of stuff is green. The QQQ is green. So, all right. Robinhood flagged me. Oh, Jose, that's not good. What happened there? Yeah, no problem, Terrence. Okay. Austin said Woodside Energy, a high dividend and stable growth. Well, let's see if that's true. So the stock has been flat since IPO. It IPO'd in 2021. Let's see what the yield is. So yeah, you get a very nice yield, a 7.7% dividend yield. They're an oil and gas place, so they're in petroleum or LNG, liquefied natural gas, crude oil, pipeline gas. Let's see. So net income. Wait, why do they report in halves? Are they a U.S. company? They might not be U.S. Let me double check. Yeah, this is an Australian company. Okay, so hold on. First off, this company's in Australia. It's an Australian company. And yeah, 65% of the revenue is Asia Pacific. I'd be careful with this name because they're international, but they probably do have a sustainable yield just because they're in the oil and gas industry and they're in Australia, so they probably traded at an even lower multiple. But I don't really trust it. I don't think I expect this to outperform, the S&P 500 in the long run. But that's interesting. It does appear to be safe, So Affluent said IONQ. Can you pull it up? So this one, I know someone who works there. They don't love it. This one is one of the least or worst quantum names. Like there's certainly like it still needs to fall 40% before it even gets reasonable. But out of all the quantum names, this one's interesting to me because a lot of the quantum names now are complete junk. Uh, But this company specifically just took a bunch of advantage of this huge momentum. They actually just diluted the shareholder by $1 billion and bought a company worth $1 billion. So it's a quantum play following a lot of the quantum momentum. IonQ achieves world record 99.9% qubit gate fidelity, whatever. But also Amazon's a shareholder. Amazon owns like 100 million of the stock, not much. Anyway, just so you buy it for the momentum. There's a lot of momentum around the name. I don't think I trust a lot of money in this name, but they're one of the better quantum names. Like I like this one more than RGTI, QBTS. So yeah. Did you comment on QILD? 100K account makes 12K a year, but maybe hidden fee. So yeah, QILD. It actually. Here's the thing. It does not make 12K a year. So here's what people see at this ETF. First off, like this has been a huge underperformer versus the S&P 500. This is a covered call ETF. It sells calls on the S&P 500. So just because of how covered calls work, this can never outperform the S&P 500. So, this started in 2013 and every year it's just slowly kind of declined. And look at the dividend as well. Here's why you can't rely on this for the dividend as well. The dividend kind of slowly trends down every year. You get a 12% dividend and you get paid monthly and it's great. So you buy this to maximize your dividend income, but it's kind of tough to see like, hey, the QQQ, the S&P are both at all-time highs. But I mean, look at this. I mean, it's a tough one to fully try. I mean, if you're 10 years away from retirement, 5 years away from retirement, I wouldn't touch this one. But if you want to maximize your income now, they're interesting. But what site is that? Seems more helpful than Robinhood. Yeah, hey, I do have Robinhood as well. Yeah, this is another brokerage. Yeah, all these are brokerages right here. If you wanted to get any of these brokerages, they're all in the link tree in my bio. But yeah, out of all the brokerages, this one is my favorite. It's the most useful, lowest fee. Like on Robinhood right here, yeah, I do like Robinhood, but they make you pay $5 a month. Like if you want to get this 3.75% APY, they make you pay $5 a month. But that's why I like Moomoo and I keep my idle cash in here because it's free. It costs nothing. I keep my idle cash in here because you also earn a 3.85% APY on your idle cash. You earn daily interest on it and doesn't cost anything. It's free. So yeah, if you want to get this brokerage, it's in the link tree in my bio, the very first link there. My favorite one. I sold Axon and bought ASML. What do you think? Yo, I don't. Axon, I can understand maybe why you sell it because of the high valuation, but I think Axon's one you probably want to never sell. ASML is another one I think you want to never sell. Oh, we forgot to look at Clover. Hey, we'll look at Clover. What ETFs do you know pay high dividends that are involved with AI? No, I don't really focus on the dividends. Like most people who are focused on dividends, like I've seen this so many times, like they don't even need the dividend. They reinvest the dividend anyway. Like they're willingly, knowingly buying an asset that respected people know like will underperform the S&P 500's 8% CAGR, but they're buying it for the dividend, but they reinvest the dividend anyway and they don't need it and pay the high expense ratio fees, get the return of capital and net asset or NAV erosion. It's a tough proposal, these covered call ETFs, unless like you really are. But I just try and warn people of that because it's like a slow bleed of your capital. But here's ASML right here. This is a lithography company. They are the chip making manufacturer behind NVIDIA, Intel, and Samsung. Those are their only three customers, literally Samsung, Intel, and NVIDIA. To ship out these huge machines, it literally takes 2 Boeing planes to ship them on. They're huge devices. And this stock deserves to be doing this well. If we look at the revenue, the sales are up 35. The revenue's up 35 and the net income is up by 86%. So they're expanding their net margin, which is great news. The net margin went from 25 to 35. I mean, that just adds money to the bottom line. You also get a nice dividend that changes every year. They are a European company, but you get EU exposure. So actually, I like ASML. I don't know if I buy it here though, but they're great. Is Yahoo Finance good for research as a free source? Yeah, it is. I love Yahoo Finance. I told you to look at a Kraken Robotics. It's up 14%. Hey, nice, Jim. Yeah, I know a lot of the whole market, a lot of stocks have been on some crazy momentum. And like the robotics names, especially, robotics sounds so sexy. So this one also has real revenue, real numbers. So this one isn't just propped up on momentum. It's a bit on momentum, but they do have some decent numbers and good growth expectations for the future too. And yeah, they are kind of making money. Yeah, dividends for when you're already a millionaire. Yeah, I love dividend stocks. By the way, if I go over here to my Robinhood portfolio, if you look at the very top, it's called our dividend portfolio. Uh, every stock in here does pay a dividend, but since I'm young and I companies with high dividend yields, with high dividend payout ratios, they never keep up with just the market. So I look for companies with dividends, but super low dividend yields. So they don't suffocate themselves with the high dividend payout ratio. So they have so much leftover money to buy a company and do share buybacks, all without having to dilute you and issue debt. So yeah, this is my dividend growth portfolio, and yeah, they have really low yields, but the stock price appreciation makes up for it. Hey, what up, Ruben? Oh, LRCX. Yeah, let's look at this one. LRCX stock. So, oh, and then we got to get to Clove stock, and then we'll probably head out of here. Oh, and we'll look at Amazon too. Yeah, Amazon's a cool one. Oh, and Walmart. Walmart's great. So yeah, here's Lamb Research right here, a stock that's at all-time highs. They deserve to be at all-time highs. Their numbers are phenomenal. You get a great dividend too. It's like Nvidia with a bit of a higher yield. A 0.6% dividend. And notice they raise their dividend every year by a good chunk as well. So uh, you're the dividend payouts you get beat inflation. We look at the revenue. The revenue's up 27. So the revenue's up 27 and the net income is up by 40, meaning they're expanding their net margins, which is great. Yeah, the net margin is a 29% this quarter. That's insane. 1.5, 1.7 billion a quarter. These year-over-year growth rates of the net income isn't just insane. So yeah, this stock deserves to be doing that well. So let's pull up Clove right here. Clove Health. This looks just like this chart looks nearly identical to like Root. Looks like another kind of Root play. Another insurance company. Yeah, the growth has been very, very good the past couple quarters. Look at that. It's up 35% after grew 11, after grew 17. So that's very good. Uh, Root might be a little better because they're making net income every quarter. This one's still not making consistent net income, but they're barely losing any money. Like they can afford those losses. Yeah, sales are growing nicely. Um, yeah, it looks like there's an insurance company. That probably wasn't too helpful there, that analysis. I apologize. I'm getting so tired here. All right, we'll probably Amazon stock. Yeah, Amazon, this is legit an ETF in one. They report earnings this week. So on the 30th, they report earnings. Let's see what the market preview looks like on Amazon. Uh earnings, are we not gonna be able to view the earnings preview? Normally it lets me click that. All right, whatever. So anyway, yeah, what I love about Amazon is their AWS business, their Amazon Web Services just had a big outage. Does anyone remember that last week? The huge AWS outage sent a bunch of things down. But this is the most valuable part of Amazon. It's over 100 billion of annual revenue. It's their highest net margin business because they're not making too much net margin shipping you a package overnight. So yeah, the revenue's up by 13, but the net income is up by 35. They legit make 15 to 20 bill in net income a quarter. And then what I love about Amazon is the fact that they don't pay a dividend and don't do share buybacks. So they're super they invest so much in the future. They're super growthy. Just spent 40 billion this quarter on their cash from investing activities. You want this to be negative. That means they're buying new assets for the future. So yeah, Amazon's a beast. They're literally they're a UPS, a Walmart, an Instacart, an Oracle Cloud, all in one. E-commerce play, subscription play, advertising play, cloud play, book play. I mean, robotics play, drone play, just everything. Satellite play. So Oh yeah, that was the last stock we'll look at here. So anyway, I hope you guys have a great rest of your Sunday. I'll end this with a quick portfolio update. I'll go ahead and share with you every single stock that I own. The market is open right now, so check this out. AMD's up 3. Is anything down? It looks like Axon's a bit down. But yeah, here's our Webull portfolio. This is kind of our risk on account where I own a lot of risky stuff in here. We're up our all-time open profit and losses. We're up 26% all time. I love being fully transparent. I go to a bunch of other streams and YouTubers and stuff, and they never fully share their entire portfolio and what stocks they own. So yeah, here's some of our losers like UiPath, Zoom, Sprouts Farmers Market. I'm actually looking to buy the dip on them. Yeah, hey, I actually just made a YouTube video, my second most recent YouTube videos, where I do a full analysis on Sprouts Farmers Market if you want to see that. By the way, best way to support me if y'all want to is subscribe to my YouTube channel. It's called Nathan Robert. You can just type it into YouTube, Nathan Robert. It's also in the link tree in my bio. But yeah, I'm streaming on there, so if you miss anything and want to replay it, you can do that as well. So yeah. Here's also our Moomoo portfolio, which is called our buy and never sell account. Where once I buy a stock in here, I legit try and never sell it. I hold it on for the long run. And yeah, we got Comfort Systems, Powell, Amphenol, Coca-Cola Consolidated, Amazon, Ferrari, and MUSA is our newest position. It's my new favorite way to get exposure to oil and gas, MUSA stock. And then finally, we have our Robinhood account. AMD isn't risky. Why is it in your? AMD is very risky, but yeah. Um, I have a there's a I wonder why you picked AMD. I got a lot like less risky names than AMD in here, like a Zoom or Tap, Progressive, Sprouts Farmers Market. So yeah, some of these aren't super risk on. Yeah, I'll probably change the name there, but I just do whatever I want in this portfolio. And then yeah, we have our Robinhood portfolio where every stock in here, of course, pays a dividend. Of course, all these are like dividend growth names. Here's our total percent change on every stock. Oh yeah, and here's our year-to-date performance. We're up 18% year-to-date. A lot, that's why you don't sell during these tariff fears, because during April, the whole tariff stuff, we were down 13, 14%. But now we're up by 18%. We were doing just as bad in this portfolio as well. Check this out. Year to date, during the April dip, we were doing worse than the S&P 500. We were down 16% year to date when the S&P 500 was down 13, but we didn't sell anything. We actually bought the dip, and that's how in this portfolio, we're now up 80% year to date. Again, most of that came from Comfort Systems. We bought the stock literally this year. They went up 20% on Friday. Check out that gap up. It's our best performing stock ever. But anyway, hope you guys have a great rest of your day. What happens? Oh, yeah, by the way, I'm not sure which app you're talking about there. Yeah, these are all brokerages. So if you're interested in wanting to buy stocks, you got to get a brokerage. I recommend all three of these brokerages right here. If you want to get any of them, they're all in the link tree in my bio. And of all three of them, though, if I had to pick one, I'd pick this one, the very first link in the link tree in my bio. It's free, cost nothing, no commissions, most useful analysis. You get the super investor trackers, all the cool analysis tools, here, and you can see like all the different investment themes, all the watch list, and there's so much cool features on here that I can't even talk about. Anyway, see you guys later. You should have told me to buy AMD. Hey, maybe I made a video about it. Yeah, Sprouts Farmers Market too. See ya, Jim. You should look into SPRB for a long term. Yo, my bad there, Jim. I didn't get to that one. It WDL'd in. Yeah. Sorry, guys. Hey, by the way, if you want to hit the follow button, we stream every single Sunday this exact same time. We stream every day. We literally just stream every day. So if you want to hit the follow button, we'll be live this next Sunday, this exact same time. And before you go, again, subscribe to my YouTube channel. We're getting close to 10K subs if you want to help me out. And if you're still on the YouTube stream, if you're still here, it still really helps me out. If you haven't already, hit the like button on the YouTube stream. That would be amazing. But yeah, see y'all tomorrow. I'll be live tomorrow.